Cricket is something that's gonna go green throughout the year with all the 12 seasons on. And today I'm going to talk about something really cool that happens on the field, what we call as partnership. And today, when we talk about partnership, I'm going to talk partnership about a team. You know the team? The team is Delhi Capitals. Do you recall that amazing partnership that happened for Delhi Capitals? Don't worry, I'm not going to quiz you people. You won't be able to catch it because there was no such amazing partnership that happened with the team what is memorable. But I'm going to talk about one. It is not the partnership on the field, but it is the partnership off the field. The ownership of Delhi Capitals is jointly owned by two companies. One is JSW Sport and the other one is GMR Group. And that's the reason every 2 years when they change their control over Delhi Capitals team, you see the change in mentorship between Venugopal Rao, who's representing GMR, and our Dada Saurav Ganguly whenever it is JSW Sports turn. And if you're talking about accounting for such a scenario, we call this cute Delhi Capitals as joint venture and these two entities JSW Sports and GMR as co-ventures. How to do accounting for the same is given by Accounting Standard 27, which talks about accounting for joint venture. Now, as per Accounting Standard 27, this accounting can be done under two methods. One of them is equity method and the other one is proportionate capital method. Let's begin with proportionate capital method and see how the accounting will be done under this method. When you're doing Accounting Standard 27 proportionate capital method, all the entities, assets, liabilities, expenses and revenue will be split between the co-ventures. It need not be 50-50 all time like Jaska Maska, any other ratio is also fine. You take the portion of the co-venturers, portion of the joint ventures asset, you add it to your total assets and write it in your consolidated balance. You will take a portion of joint ventures liabilities, add it to your total liabilities, write it in your consolidated balance sheet. Same is the case that we do with our revenue as well as expenses. Now let's go to the other method that's allowed as per Accounting Standard 27. The other method, like we know, is called as equity method. Under this method, what we do is we represent our investment in our joint venture by way of investment that would appear in the balance sheet asset side. To that we'll add the proportionate income, whatever belongs to us from the joint venture, add them together and that becomes our asset as per AS 27. If you watch the video till here, it means I am giving you a pill of knowledge what you find really exciting to watch. Do suggest me more topics of this type of general in nature which would boost your understanding about accounting. Waiting to see you all in the next one. Till then, stay in the game.